All right, ladies and gentlemen, I hope you had a wonderful weekend. Last week was an epic rally. You had a 250-point move on the S&P, 5 days in a row of green, and the last time you saw any sort of consecutive gap up like this, it was around the same time, November 2020. So a lot of people are excited. The rates came down. This was all off of the heels of Jerome Powell and everybody thinking he's done, and it's getting people excited for the end of the year rally. But now the stock market isn't safe just yet, because we hear from Jerome Powell twice this week. So we brought this up last week. We were saying how it's interesting where the market is kind of bullying Powell by loosening up financial conditions the moment he says he's worried about them. So now you have two opportunities this week to hear from Jerome Powell and how he feels about these financial conditions, especially what has happened over the last couple of days. So Chad, we have a lot to talk about. I have a breakdown for you. I have what you need to watch this week, whether we rally, whether we die, what to watch for with Powell, but even down to the bonds and some other global factors. I do have something important here, and then we're going to talk about earnings, the plays, and where we go for the rest of the year. So Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/TheStockMarket. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, I almost forgot about the random account generator. We are moving that to Schwab tomorrow, so hopefully it works. So post a random option trade below, keep it below $100, or post a random comment you want me to read tomorrow. We're going to go through the watch list in the AM. Yeah, baby. But to start it off, let me tell you what you're going to be dealing with this week. Like we talked about, last week was all about this idea that Powell is done raising. Powell brings up financial conditions, and sure enough, financial conditions ease as a result. We are going to get to hear not only from Powell now how he feels about that, but the main event this week, it is all Fed speakers. So you could go to Trading Economics. You could go through the whole entire calendar. What am I saying? But if you go through, you'll notice there's a lot of events, especially overseas. We're going to get import and export data. But if you go through from Monday till Friday, you'll notice it is a bunch of Fed speakers. So you're going to get Fed Cook on Monday, then Fed Barr, Jeffrey, Waller, and Williams, and Logan on Tuesday, then Powell on Wednesday, as well as Williams, Barr, and Jefferson. Then Bostic and Barkin are going to be on Thursday, as well as Powell again on Thursday. I'm going through. I had to organize it a little bit. And then on Friday, you're going to be getting Bostic again. And the only other thing on Friday that we're going to be getting is going to be the consumer sentiment. I'm just scrolling through. I think I missed everything, but that's why I wrote it down prior for you. But the general idea, you have two opportunities to hear from Powell. He's going to make his comments, but then all these other Fed speakers, the whole market is thinking we are done. Everyone's going to be nitpicking the data. You saw how they turned last week's data into quote-unquote Goldilocks. So a lot of Fed speakers speaking. This is going to be an opportunity for things to either get set in stone, or we're going to get a little bit more volatility here, and then maybe the market calms down before really finding that ultimate end-of-the-year rally. So that's the first thing I wanted to talk to you guys about for this week. The second thing now is not only do the Fed speakers confirm or deny a rally, but I do think the bond yields, they will tell us whether or not we're going to spend this week kind of, solidifying what we did last week, or if there's going to be the next leg up up or down. How can we determine that? Well, it's the good old 10-year that we have been bringing up. So now time is going on. What we saw from the beginning of October, it's faded from this chart. If you remember, I was telling you that 4.85 or 87 and then the 4.7 peak. Well, last week as we rallied, this ultimate rally, we were able to go beneath there. So this is the next spot we have to be looking at. We were talking about 4.5 to 4.25. This is a range where I think the market can find some stability while rates still stay elevated. Some people were asking, why does 4.5 to 4.25 matter? Because if you think about it, from June, the rates were at 3.4. So this is about 1% higher. And the way I'm looking at it, if we wanted to see an end of the year rally, you just don't need the rates higher, and you would need the rates to stay at a range either ultimately lower than 4.25. But if they could hold 4.5 to 4.25 here for the next month, this may be a way to say, hey, we're stabilizing, but rates will still be higher, and then that higher for longer narrative is still in play, but then we get rid of that whole, oh my gosh, everything is dying. That's what happened every time we were at 4.75 to 5.0. So if you want to see the next leg of the rally this week, I think it's going to be determined by how we play out at 4.5 and below, just like we were watching last week in getting down here into the first place. So this is a big deal. We've been bringing it up a lot. I would definitely watch out how this plays out this week. That is number 2. And then finally, the third thing I want to go over is how the markets have moved like we have just recently. And what I'm talking about is these gigantic recent gap ups. This was something I was saying at the beginning of the video. I was even bringing this up a lot on stream on Friday. It has been a while since you have watched the chart just gap up day after day. This is still November 2020 that you're looking at here, but I did go back through all the other years, and I noticed there was a couple of opportunities where we have watched the market kind of gap like this. One was late March after SVB. You had a 3970 to 4129 move, almost similar size. This one is way bigger, but you notice you had like 2 days of gapping up. Now, granted, after the second gap up day, you see those gaps close. What I'm talking about is multiple gap up days in a row, not to mention 5 green days, but you saw a little bit of that in March. We saw that this year. It wasn't too crazy, and you saw the recovery following that. But now let's go back to the other years. I'm going to have to go back and forth a couple of times, but here is 2022 on the way up. We didn't really see gap ups except for right here. There was a 2-day gap up from 3,900 to 4,100. We've already moved bigger than that, but that was last September, and this is where I think things get interesting because, like I'm showing you, if you go back throughout any time in the market over the last couple of years, you didn't really see it in 2021. It's very rare that you gap up this many days in a row and this large. So, like I'm saying, besides November 2020 or SVB, the only other opportunity that you had was here around September. And then you zoom in, the gaps don't even look that big. But this is what I'm saying about this week, because we were looking like August to October. There's a lot of similarities. We had a monster rally, and everybody is ready to green light the end of the year rally. And I kind of am too. Remember, I was thinking that upside into October, but like I'm saying, this is the opportunity for Powell to come on and set the record straight after the reaction. So I'm looking at it this way. If he's going to bless everything and not walk back things and come in increasingly hawkish, then I think we are going to get the November rally. If he somehow wants to pull the rug under everybody, then maybe we get a September. But for the most part, we shouldn't have too much data. It's all the Fed speakers, and now we still got earnings, and that reminds me, let us get into the plays. So, right off the bat, like I said, we have earnings, and there is going to be a lot of plays. So before I get into any of the plays, I want to go over the calendar. You can see here, Monday morning, we are going to get earnings. It says Realty Income. I thought they already reported, but they were dropping on that buyout, but you're getting them after hours. NXP, Vertex, Diamondback, Clover, TripAdvisors, and a couple of others. Even in the morning, you're going to wake up to Dish and Berkshire Hathaway. We are actually already got some numbers, I believe. You got to hear about Berkshire Hathaway's cash pile. But that's Monday morning. We already got a little bit of that. Then Tuesday, you're going to get Uber in the morning, then Celsius, Datadog, DR Horton. So a lot of other industries, a lot of different plays. Then after hours, Rivian, Oxy, Wish, Mosaic, Gilead, Roblox in the morning on Wednesday morning. Disney after hours on that same day. That's going to be a big one. Then companies like Win and Plug and TTD, and then everything else. So I was giving you a speed run on all of that, but for the most part, there is still earnings plays, and here is the plot twist. Up until last week, the earnings were bad. After last week's, a lot of earnings came in good. We are now above the beat rate. Some of these names, this might be the second leg of steam, especially if we want to see any rally. But still a lot of names out there. Again, most of the companies, the first half, they would report good and get crushed. Lately, last week, if the names were good, the earnings were good, they were able to go up good. So I'd be watching out for these plays. As far as everything else, though, I do want to start off with one other big play, and it's gold. We were bringing this up with the conflict, the volatility, but you have to notice something. The market has changed drastically, even the bonds, but gold looks like it has already leading into this prior. I would keep your eyes out for it. Watch for it to either die or to keep going up. Again, there's a weird dynamic between fear dissipating that could help bring it down, as well as now, if we are close to the rates not actually going up or getting closer to a cut, then that means that's good for gold there. So watch out for them. The same goes forth with oil. I made a play on them on Friday, flipped out of it. But again, with everything going on, people even talking Goldilocks earnings and everything, I would want to keep an eye out on oil and see how they perform. But that is play number one. Then play number two, I'm going to have to go here with Disney. This is one of those earnings plays. I have them for the long term. I wanted to make the flip shares leading into it. Would I go for the pre-earnings? Unfortunately, no. Not unless we really rally and they want to take off. But now, unfortunately, a $5 move here, that's a 5% move so far. I think they may have already had their pre-earnings run. But afterwards, definitely going to be watching out for them. They still have not announced their dividend stuff, so they talked about that at the end of last year. I hope they're able to make that announcement now, but they did say recently that they were buying out Hulu and all of that, so hopefully that does not change the plan. But that is play number two. Then finally, play number three, I'm going to have to go here with Tesla. Over the weekend, Elon announced some like chat GPT AI thing. He's going to release it on like Twitter for like a beta test and all of that. But with how Tesla's been, even the fact that they closed almost break even on a pretty epic week, they still got their run up and all of that. They're right there at earnings, depending on how this week plays out. Even some of those headlines in news, if we do get that end of the year rally, Tesla might be a good one. But remember, last year, everything got an end of the year rally, and then Tesla kind of got left out. So watch out for that. That is play number three. As far as everything else, like I said, watch out for some of those related to earnings. I even got Berkshire Hathaway up here. You're going to be hearing all about them tomorrow morning. There was other weird news, like on Friday, there was a company, they literally in the filing, they said God. They consulted with God. I don't know if it was real or fake, but somebody put an offer to acquire WeWork shares for $9. Don't know if it's legit or not. You even had Meta, Mark Zuckerberg was like rushed to the hospital because of I don't know if he was rushed to the hospital, but it was a knee injury due to like MMA training. So we'll see. There was a lot of other stuff floating around over the weekend, but generally people were feeling good. We still got earnings. We'll see if Powell or anything around the world can distract from this, but for the most part, people are feeling like they're good for the end of the year. And now I hope you're ready for 2024. But that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And make sure you keep the emotions in check. The mentality is more important than anything. Around this time last year, I was even saying we are all in the same boat. Win or loss, do not underestimate how important your emotions are in all of this. Keep your head in the game and bring it to the end and get ready to start something new, because the new year is already here, Chad. So I hope I see you in the morning. Drink that water, stay hydrated, healthy, get some good night's sleep. It's gonna be wild. I love you, and horn.